9 years of trading, thousands of trades and countless lessons learned. Today, I'm sharing the exact strategies that have stood the test of time. If you are serious about becoming a consistently profitable trader, stay with me, yeah? This is the blueprint you need. Before we dive into the strategies, let me show you why you should pay attention. Over $1 million in combined payouts among our students this year alone. 9 years, and these strategies have delivered consistency, not just for me, but for thousands of traders in our community. This isn't theory. These are battle-tested strategies that work in the real world. Let's break them down. Most traders think they need a magic formula, an indicator, a pattern, or some secret algorithm. But here's the truth. Strategies fail when they are overly complicated or don't adapt to changing market conditions. After 9 years of trading, I've learned that simplicity, adaptability, and understanding market behavior are the keys to consistent results. Today, I'm sharing 3 strategies that have delivered time and time again. And to make this practical, I show you real examples on the charts. Let's start with my bread and butter, using price action and volume together. Most traders rely solely on price action, and why it's powerful. Volume gives you the context behind every move. It shows you whether the big players, institutions, and banks are truly behind a price movement. So here's an example. Notice this high volume node. This tells us that the market has found value. Here, this is where sellers and buyers are heavily interacting. And now look at the price action at this level or around this level. Do you see how the market consolidates and then breaks out? And now it becomes really interesting. At first we have the big sell-off, and then we see the resistance from the buyer side where the volume gets created. And from now on, this zone, this area is very interesting for the buyers. And now let's see what's happening. We have the first try of a breakout. That's what you see here, direct after the first institutional power, okay? And the intention behind this first breakout attempt is just to come back to the initial level. So just to search again the volume, and that signals that here are institutions active to then break out, okay? Because this breakout is backed by institutions. And it feels like magic as soon as you understand how this game works, So that's your entry signal. So you see the first activity, then you see the first attempt, the market, the institutions, they come back to their initial level, and then they break out. Then they go in the direction they want to go until we see the next high volume. Where do we enter? You can enter at this level because you see, okay, they want to go higher. But what's better for you is if you enter the trade at this level, that you have the confirmation that they also want to go higher above the last high, okay? So the stop loss, you either put it under the high volume or under the last low. So what is the potential of this trade? So when we see this here, my maximum loss would be $225. if I trade with just one lot in the S&P 500. But the potential is the last high volume node. So if we go from here, we have this potential to make at least $425. So you can decide if this is a good risk to reward ratio. It's a high probability trade baked by both price action and volume. Your first quick win in this video is start adding volume to your charts today. Look for high volume areas and observe how price reacts around them. You'll start seeing opportunities you never noticed before. Believe me. What's your experience with volume in trading? Have you tried it? Drop a comment below. I would love to hear your thoughts. Let's continue. Support and resistance are the foundation of every successful trading strategy. But here's the twist. Combining them with volume makes these zones even more powerful. Maybe you have already noticed this orange horizontal line. What do you think this could be? Okay, let's go up the time frame to the 15-minute time frame. And then we see this orange line again. And do you see this candle, this big rejection candle? Okay, look at the time. It's 9:15 and the next candle is 9:30. So this candle was between 9:15 and 9:30. Good. Let's go back to the 1 minute. Do you see the time? It's 9:19. Okay, could this be this big rejection candle? Okay. And yeah, let's come back to price action. We are looking for support and resistance levels, right? So, and let's see what happened in the past before this big rejection came into the market. Do you see this candle here? Do you see this candle here? Do you see this candle here? Do you see this area here? Do you see this area here? Do you think that this line that I painted, that I drawed, is a high probability rejection area, resistance area? So and that's so important to understand what we are looking for. I always look for areas, for price level, where I see that in the past the market had some activity, some major activity, some major resistance or some major support. And then the magic isn't magic anymore, it's just logic. The price tests this level again and again, and what's more likely next? And then if the price or the market breaks through a key major level, most of the time it gets very messy. And you see what happens. So they tried to push through this level to lower prices. And do you see the rejection, the rejection, the rejection? And then you see the first time the rejection above this level, and then you see the big breakthrough. Let's see how this looks with volume, okay? And if there are any probabilities for us to take a trade. So we have to go here to see the first breakthrough. And then you see this heavy breakthrough to a lower level. And then you see the first time you see this big rejection with a volume. So this could be the next trade opportunity because we know, okay, the market, it gets rejected. So what is the target? First, we go back to the level where we feel good, yeah, where the market participants, they feel good because this was the last level where they consolidate, yeah, where they took all the power they need. And then let's see the next time. Do you see the volume again? Yeah, at this level, we can mark this level, the volume, and let's see what happens. So you see, okay, the market breaks one time through this level. Here we have the first time we have the volume, then we have this volume. Let's mark this again. And then we see, okay, the market came back in this zone. So, and then they tried to break through again. They used the power, and then we have the next big volume zone. You see here on the low where the resistance came in, we have the next resistance. So let's see what's going on. So we see the next, and we see the next, but now it's getting, or it becomes very interesting. So we see the market goes lower and lower. We see the last resistance on a lower level, and then we come back to the area where we saw the last time the high volume. And then you see what happened here. Volume, volume, volume. But I tell you one secret. This was when the market closed. So quick win again for you. Mark the major support and resistance levels on your chart. Combine them with volume to confirm breakouts or rejections. Yeah, this simple addition can significantly improve your accuracy. Most traders chase the breakout, but after 9 years, I've learned that the pullback is where the real money is made. So here's how it works. So if we assume that I'm just one of the breakout traders, I would enter this trade where, right, I would enter the trade above this last high. But we want to enter where the pullback is. So the best case scenario would be that we enter somewhere like here, right? Okay, let's dive into the volume chart. And now it's again where the real magic begins. Down here we see the horizontal yellow line, that's a support price action low, okay? But then we have again this interesting high volume area. The first thing, we have this first breakout attempt, but then we have the pullback, yeah, we have the rejection. So the market comes back to our high volume area and then break through the last high. Where do we enter the trade? We enter the trade directly here at this level. Our stop loss is very small, but the probability, so the chance of our win, the reward potential is very high. Why? Because we are always just risk 1 to 2% of our account balance. That means I have a very small stop and a long way to go, right? That's at least the level where we can go, where we want to go. So, but if we enter the trade here and we risk 1 or 2%, that means that the way we can go is smaller, shorter, and of course, the percent we can make with this trade. Next time you see a breakout, resist the urge to chase. Wait for the pullback, confirm it with volume, and enter with confidence. Let me share a personal story. Early in my career, I was that trader who always chased breakouts. Yeah, I would see a big green candle and think I'm going to miss out. Maybe you see yourself in this story. One trade sticks in my mind. I entered right after a breakout only to watch the market reverses and hit my stop loss within seconds. I lost more than $1,000 on that single trade. That loss taught me a valuable lesson. Yeah, patience pays. Now I wait for the pullback, confirm it with volume, and only then do I enter. And that one change has made all the difference. Now let me show you how to incorporate these into your daily trading routine. The pre-market preparation: identify key levels of support and resistance and then mark high volume nodes using, for example, the volume profile tool. And during the session, wait for price to approach your levels, okay? Look for volume confirmation before entering. And last but not least, the post-market review. Journal your trades, yeah? Analyze what worked and what didn't, and refine your approach for the next day. Start small, focus on one strategy at a time, and remember, consistency is what separates successful traders from everyone else. If this video helped you, hit the like button and share it with someone who needs to improve their trading. And in the comments, let me know which strategy are you excited to try first.